Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Credit Suisse holds its first AGM since the UBS takeover later this hour, in fact, the first in 4 years. The S&P says the lender risked imminent bankruptcy without the deal. We're live in Zurich. The Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. European stocks are higher while oil continues to gain on the surprise production cut by OPEC. Plus, Donald Trump arrives in New York for his arraignment, while the former president is set to plead not guilty, while the city is on high alert for the historic proceedings. Now, first thing is first, let's check in on the markets. The focus yesterday was definitely on the U.S. two-year yield. Today, still on the U.S. two-year yield, 3.9924. So again, hovering to that pretty historic 4%. The picture is, of course, a bit of repricing when it comes to production of oil, and that cut that was announced over the weekend. European stocks gaining some 0.2%. Now, there's not a huge difference whether you're sitting in France, in Germany, or elsewhere. Yesterday, we definitely saw a boost to the FTSE 100 because this is an index that's very oil-rich. I don't know whether we have the European map. If we don't, we'll come back to it very shortly. Now, we also have the Secretary of State in Europe. This is Antony Blinken. He is joined in Europe, and we're expecting, this is Mr. Borrell, we're expecting Antony Blinken to talk shortly. The focus, we understand, will of course be on Ukraine and maybe some of the weapons. And we're also expecting, we know that Mr. Blinken yesterday spoke to Sergei Lavrov of Russia, also about the Wall Street Journal reporter. Now, the Swiss banking drama continues today with the Credit Suisse AGM due to begin in just about half an hour. It will be an opportunity for shareholders to speak directly to the board. It comes as Swiss National Bank Vice President Martin Schlegel says if UBS had not taken over Credit Suisse, it would have gone bankrupt the next trading day. Now, he says that would have likely led to a global financial crisis. Bloomberg's Oliver Crook is in Zurich for us this morning. So, Ollie, what's the mood like on the ground?
Well, Francine, the mood on the ground, as you can probably imagine, is not great. This is the first shareholder meeting where the board and the shareholders will both be in person since 2019. Since April 26, when they held that last meeting, 93% of shareholder value has been completely wiped out. It went from back then to being a $35 billion banking giant to being sold for $3 billion. And that's really what investors will get to, speak to the board about directly in about, as you say, 30 minutes time. We'll hear first from the chairman, then the CEO, and then it opens up to the floor and it's Q&A, it's statements from shareholders, questions from shareholders, and later in the day you'll have some votes as well. And obviously here there's police here. We see some of the protests that have been going on here. This one specifically is for fossil fuels, so perhaps less concerned about shareholder value and more about the planet. But really it's a major deal here in Switzerland, as you know, Francine, and some shareholders that are really very unhappy.
Yes, what are we expecting? What are they trying to achieve today? Some of these shareholders voicing concern, but can they get money back?
So this is the big question. So obviously there's a sort of the catharsis of this in confronting the board and dealing with the issues of the last 3 weeks and yes, the last 3, 4, 5 years. But also, is there anything that they can salvage from this? So we were speaking to one of the representatives that is representative of the shareholders through the Swiss pension system, Vincent Kaufmann, a little bit earlier. Have a listen to what he said.
Looking for past compensation and variable compensation paid to former board members. If there were to be some additional clawback to activate, because currently it's only the bonus 2020 and 2021 which are concerned, but there is more kind of deferred bonus which should be clawbacked, I guess, from former management.
So two things to look out for, one that bears on the other, the votes. They're voting on whether they're going to re-elect the board. The chairman, the Norges Bank, has come out against the chairman. But this is precisely to what Vincent was talking about. The board that they put in place will be dictating in some ways how the information gets disseminated. And if they want to claw back bonuses, claw back compensation for mismanagement in the past, they will need a board that is totally clean of any of that and doesn't have any is not tainted by it. And that is the focus for Vincent and I suspect other shareholders here today.
Yeah, what can we expect from UBS tomorrow?
Right, and if today is sort of the farewell for Credit Suisse, tomorrow is really the hello and what is the plan here for UBS, because this is not an AGM that they were expecting to have. They have to completely explain what this new business is going to look like. You know, there's the question of job cuts. We've been hearing over the weekend reports on that. Will they spin off certain parts of it? As we were talking to Vincent Kaufman from Ethos, who's a shareholder in UBS as well, thinks that they really need to spin off parts of the business, partially due to the concentration risk here in Switzerland of too many of these businesses, but also, you know, if UBS is too big, they may act in the interest of the company and the management there, but not necessarily the shareholders. So really, that'll be kind of them coming out and saying, hey, beginning to lay out what the plan is. We know that that will take, however, some weeks, if not months, for them to have a full plan on that.
Ollie, thank you so much. Ollie Crook there with the very latest, of course, from the Credit Suisse AGM. Now, Fed Governor Lisa Cook says she sees U.S. inflation easing, but price pressures could keep coming from a tight labor market.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is in, I think it's in process, it's in train. We're not there yet.
Well, over in Europe, and the ECB's Holtzman says a 50 basis point hike is still in the cards for May. Well, let's bring in Karen Ward, EMEA Chief Market Strategist at JPMorgan Asset Management. Karen, as always, thank you so much for joining us. It's been quite a month. I feel like we lived through a whole decade for the month of March. What's the next thing to fall? I don't know whether there's something that, you know, we talk about commercial real estate as the next thing to break, and whether you see that
Yeah, I mean, certainly the banking sector turmoil is going to have the ripples now. We may be through the banking news, but the ripples through the real economy, that still needs to play out. And as you say, commercial real estate is probably at the forefront of that. And that's going to continue, probably more centered in the US than here in Europe, where we think the ripples will be smaller. So that's critical, but it still comes down to the inflation data, Francine. I mean, if inflation falls very rapidly, then the central banks have all the degrees of freedom to react to whatever news is happening in the real economy. If inflation is sticky and they're constrained, then we're in a very different environment for how they can turn their attention to growth. So to me, it's still all about the inflation data.
Yeah, and I think you're 100% right. I mean, we try and game theory what central banks will do without really knowing what inflation does from here. Do you expect it to you know, almost naturally come down, but then get stuck at between 4 and 5%? And how much will they have to crush the economy to get it down to their target?
Yeah, absolutely. I mean, I think it is on its way down, but it's going to be gradual. And I personally think just that world of low inflation, zero interest rates is thoroughly behind us. That's the biggest thing investors have to get their head around, I think, as we look to the future. I think they will be relatively patient. I personally think that as we go through the coming years and just reassess where we've been, whether that zero inflation, that low interest rate environment, that need to produce all these unconventional tools like QE and forward guidance and all the problems that that's creating them, whether actually shifting ourselves to a higher inflation number and a higher nominal neutral interest rate wouldn't actually be a bad outcome. I don't think they're going to talk about that. Of course, they shouldn't for some time. Yep. But overall, I think that a degree of patience in how that inflation rate comes down is probably what we'll see.
Karen, what are the markets getting wrong? So, you know, they're definitely pricing in cuts from the Fed this year. Is that too soon?
It does seem too soon. I mean, I think it comes down to the behavior of the labor market is a big uncertainty through H2. It's possible that actually as demand slows, vacancies dry up and that then moves into job cuts quite quickly. I think it's more likely that given how difficult it's been to find staff, we see a lot of labor hoarding. And therefore the labor market stays pretty tight, which is a double-edged sword because of course it creates resilience in the economy, but it also keeps the inflationary pressure. So I just don't see the economy quickly crumbling, which leads to any of the central banks thinking about cutting in the second half.
So you were talking about the banking crisis, as we haven't maybe felt the ripple effects, but you don't expect it. You don't expect anything to implode.
I think it will be at the margin. Yeah, exactly. I think it will just add to the slowing pressures, but I don't think we have the foundations of the vicious cycle that we usually have. Yeah, exactly. We don't have, I think, the oversupply, the construction, which causes prices to fall, volumes to recede, credit to be pulled in. All of the foundations that gave us the problems in 2008 was not only excess in the financial system, it was excess in the real economy. And I think we don't have the combination of those two. So to me, it's another gradual slowing, adding to the pressures of higher interest rates generally. But I just don't see that vicious cycle and therefore the momentum of the slowdown picking up.
Beautifully put, beautifully explained, Karen. So where do you want to be invested in the markets?
Well, I think, you've just got to be a little bit cautious about risk at the moment, given how far markets have come. I do slightly struggle to square this narrative of the central banks are cutting rates rapidly, and that's good for risk. If the central banks are cutting rates rapidly, something is going horribly wrong in the second half of the year, and therefore I think risk looks overbought. So I do think that maybe we need to focus in the short term on quality, high quality fixed income, quality in stocks, being very balanced. I mean, there's a lot. I think everyone should be humble about what we need to discover in the second half of the year, the ripples of the banking crisis, whether inflation is still going to be a problem or not. So I think keeping balance, particularly outsized positions, I think is the main thing we would advise against.
So would you see, some of these worries pan out in the next earnings season, or does it take longer for
I think it's going to be a slow burn. Yeah, I think it's going to be over the next few quarters, where we're just also still adjusting to what this new pandemic world looks like, the degree of pricing power, the role of the labour market, how much pent-up savings is still there, and then some of these structural changes that are going on. I think it's going to be quite a slow burning.
Is liquidity okay in the markets? I don't know whether there's any black swan that we should be seeing now that we're not really talking about.
Not obviously at the moment. I mean, certainly in periods of stress, you do see that liquidity dry up pretty quickly, but in normal functioning times, as we seem to be back to right now, it seems to be fine. And that's where I think the liquidity provision by the central banks, including some of the new facilities put in place by the Fed, have really, I think, been a game changer in ensuring that this does not become a liquidity problem that turns into a solvency issue.
And Karen, when you talk about growth companies or some of the best companies out there, geographically, is it the UK versus Europe, or do you just have to look for big conglomerates that could also benefit from China reopening?
So I think China's reopening is probably the area which we have most conviction in, because it's not prone to these uncertainties. We're not worrying about whether inflation is persistent and higher interest rates. We're not worrying about the banking situation. So I think I have most conviction on the strength of the earnings profile through the second half of the year in China. With Europe and the US, I think it's a really interesting conversation. It comes down partly to whether you believe this is going to once again be a growth-driven cycle or maybe a more value-driven cycle, because of course, as you were talking to earlier on, European markets are more value-orientated. I personally think this then comes down to that crucial question of, are we going back to that zero interest rate, zero inflation world? If you are, then you want to be getting yourself back in the growth areas of the market, positioning yourself for the cycle that we've just experienced. I just don't think we are. I think we're in a fundamentally different world, and therefore the losers of the last cycle are going to be the performers, and that's where Europe gets more interesting.
Karen, thank you so much. As always, Karen Ward there, EMEA Chief Market Strategist at JPMorgan Asset Management. Coming up, it's a busy day in Brussels with NATO foreign ministers meeting to discuss energy security, but also the war in Ukraine. We'll have plenty more on that shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the EU's Foreign Affairs head, Joseph Borrell, says that the bloc will keep up the, quote, collective pressure on Russia. It comes after the EU leader met with the U.S. Secretary of State, Antony Blinken. So let's get straight to Bloomberg's Maria Tadeu, who's at the European Council. Maria, thank you so much for joining us. So what have we been hearing from the foreign ministers?
Yes, Francine, and the two repeat in this message that they will continue to support Ukraine, but in particular, and you picked up on that comment from Josep Borrell, the top European diplomat, insisting China has a responsibility to mediate, but also use its clout to force Vladimir Putin to de-escalate in his war. Now, Francine, as you know very well, some believe this is completely naive at this point from the European Union. We have not seen China do anything in a year to de-escalate the situation, but nonetheless, this week is important because you have both the head of the European Commission, Ursula von der Leyen, and the French President Emmanuel Macron heading to China to see and speak with Xi. The other important issue of the day, of course, and we are going to be relocating to NATO very soon, is, of course, Finland now finally officially becoming a new member of the alliance. It's been 10 months of back and forth, but today it will come to fruition and there will be a special ceremony for it. And just what a change in foreign policy for the country. And again, one of those big geopolitical ramifications of the war in Ukraine.
Maria, thank you so much. Our Maria Tadeo, they're our Bloomberg European correspondent with the very latest on Brussels. Let's also get to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. military says a suspected Chinese spy balloon shot down in February had gathered intelligence from military sites. NBC News earlier reported that China was able to transmit information from the balloon in real time, but the Pentagon says the military took actions to ensure China gained little value from it. Now, Disney CEO Bob Iger has called Florida's Governor Ron DeSantis anti-business for his policies regarding the theme park giant. Speaking at a shareholder meeting, Iger said companies also have the right to the freedom of speech. The world's largest entertainment company has increasingly found itself in a fight with conservatives over its policies and the content of some of its output. Nigel Lawson, who was Margaret Thatcher's most important chancellor, has died aged 91. One of the British Conservative Party's best-known figures, Lawson oversaw the City of London's Big Bang deregulation of financial markets in 1986 and a tax cut-fueled economic boom. A late convert to Euroscepticism, he remained active in politics for nearly half a century, including in the House of Lords, which he attended as recently as last year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Coming up, as the first quarter of 2023 ends, we find out what companies you should be watching over the next 3 months. That's next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, sneakers, lipstick, and wind turbines, they all have one thing in common. They're the companies that make these all on Bloomberg Intelligence watch list for the upcoming quarter. Now, for more on all of this, we're joined by Tim Craighead, Director of Research at Bloomberg Intelligence. So, Tim, that didn't come out as it should have. So you basically put a list of the companies to watch, and they're very different, but they have something in common, is that you see value in them.
Absolutely. It's a case where we have an ongoing broad list across Bloomberg Intelligence called Focus Ideas. And these are a combination of a strong fundamental view that we think is differentiated versus the market, and there's catalyst ahead to change the mindset. Now, these 10, as a subset, all have catalysts coming up in the second quarter that we think are particularly important. And you're right, it crosses sectors, it crosses regions. There's 8 that are positive, there's 2 that are negative. So, yeah, it's an interesting bottom-up mix.
So out of the 10 companies, 3 of them are in Europe, and you even have a bank, BBVA.
Yes, indeed.
That's bold.
Yeah, these days, for sure. And, you know, BBVA, I think, is particularly interesting. Big chunk of the bank is Mexico, and their lending growth is quite robust. A big chunk is Spain, obviously. And there you've got a net interest margin story that continues to improve with higher interest rates. There's a focus from the street on Turkey. That's only 7% of the company now. We don't think it's that big of a deal. All in total, we think we've got positive surprises in earnings. Capgemini, big IT services company focused on strategic transformations, not cyclical businesses. Again, positive surprises we think can come about. And Investos is just right smack in the sights of energy transition, with both European and U.S. spending pushing towards things like wind, and they're a leader.
So, Tim, talk to me a little bit about how China's reopening is actually affecting some of these companies.
Yeah, there's two in particular that come out here. One is AIA, which is a big insurance company based in Hong Kong. The second is Hong Kong Exchanges, which is, the local stock exchange. AIA, I think, is interesting because you think insurance company, China reopening, but mainland travelers come to Hong Kong to invest through insurance policies, and that all but dried up during the pandemic. It's now reaccelerating, we think, underappreciated. And Hong Kong Exchanges should see, we think, a pretty robust pipeline of IPOs coming. And then, you have something like Alibaba announcing it's going to split up into 6 components. All of those could list in a combination of potentially Shanghai and Hong Kong.
Tim, thank you so much. As always, Tim Craig had get there with a great list, actually, of 10 companies that you should watch. Coming up, the chief executive and chairman of Credit Suisse, due to address shareholders at the lender's final AGM, will, of course, bring you that live next from Zurich. This is Bloomberg. Credit Suisse holds its first AGM since the UBS takeover in a few moments, while the SNB says the lender risked imminent bankruptcy without the deal. We're live in Zurich. The Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. European stocks are higher. Oil continues to gain on the surprise production cut by OPEC. Plus, Donald Trump arrives in New York for his arraignment. The former president is set to plead not guilty, while the city is on high alert for the historic proceedings. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we are expecting, of course, to have a couple of speeches from Credit Suisse. Our Ollie Crook is on the ground there at the annual general meeting, which should get started very shortly. Of course, at the crux of all of this is to see who will be in charge to try and maybe renegotiate some of the deals. Also, we've been speaking to a number of shareholders that have been on the ground speaking to Ollie. And of course, this gives us a good indication of maybe some of the rescuers that they're looking to find. So this is a picture across the board. When you look at the Credit Suisse share price, it's incredible to see how much it's lost over the last 3 months. Now, the Credit Suisse chairman saying he is truly sorry for failing to save the bank. We are expecting him, we have been given an advance copy of his speech. We're expecting him, of course, to talk very, very shortly. He basically says he stands here today in a situation that no one could have anticipated. We understand that he will also say this is a sad day. So there are a number of Credit Suisse, of course, headlines crossing the Bloomberg terminal with the chairman saying he's truly sorry for failing to save the bank. I think we can now listen in.
Regarding the inconvenience at check-in, the measures we've taken are meant for your security, and I would like to thank you for your patience. We need to make some formal statements at the beginning of the AGM, and I'll be brief as you are expecting substantial statements. It is important for me to give you time for your questions, your statements. You have the right to do so, and we would like to create the framework for it. I would like to welcome all the members of the Board of Directors and the Executive Board present here today on the podium. From your right, we have Mr. Ulrich Körner, the Chief Executive Officer, Markus Diethelm, the General Counsel, and Dixit Joshi, our Chief Financial Officer. And on your left, Mrs. Joan Belzer, the Secretary of the Board of Directors. On the side, we've got Notary Alexander Gossauer of the Zurich Altstadt Notary's Office. Next to him, Mr. Christian Schmid, whom we're proposing to be elected as the head teller. Our auditors, PricewaterhouseCoopers AG of Zurich, is represented by Matthew Falconer and Andreen Burnett. I would also like to welcome lawyer Raphael Keller, who is representing the independent proxy Keller AG Lawyers Office. Dear shareholders, we stand here today in a situation no one could have anticipated. It's a sad day for you and for us too. I can understand the bitterness, the anger, and the shock of all those who are disappointed, overwhelmed, and affected by the developments. We wanted to put all our energy and our efforts into turning the situation around. It pains me that we didn't have the time to do so, and that in that fateful week in March, our plans were thwarted. And for that, I am truly sorry. I apologize that we were no longer able to stem the loss of trust that had accumulated over the years and for disappointing you, and I would like to apologize for that. 1 year ago, a little more than 1 year ago, I stood before you and agreed to take on the role of chairman of this bank. Not of any bank, but this particular bank, Credit Suisse. I did this knowing full well what the size of the task was, the accumulated problems and the time pressure and the difficult geopolitical and macroeconomic environment. I also knew that in the worst case, we might not succeed in our goals, that mistakes can happen, and that those who are at the helm of the end are responsible too, hence including me. That was the starting point a year ago. It was absolutely clear and unambiguous to us. We needed a comprehensive strategic and cultural transformation. The business model had to be fundamentally overhauled and changed. It was also clear to us that there were unhealthy developments, errant behaviors, and wrong incentive systems, that there were transactions that should not have been allowed to play out, that we needed to work in many areas, not only on structures, but also on mentality and culture. That is what we wanted to rectify. That was the goal of our strategy. But there were positive sides too. Many outstanding, committed employees, satisfied clients, and the strong core on which we wanted to build. This motivated us and inspired us. Despite being faced with these difficulties, I was convinced that the turnaround was achievable because Credit Suisse has many strengths, a strong balance sheet, outstanding employees, and renowned client solutions. Progress was made at many levels. Regulatory issues and close interaction with supervisory bodies became top priorities. Within months, the bank's management team was fundamentally renewed and a forward-looking strategy was developed to radically adjust the risk and return profile. This gave us confidence. And believe me when I say we fought hard to ensure a successful turnaround. Ulrich Körner and I were fully aware that such a profound strategic and cultural transformation would require time, and that in year one of implementation, the bank would be most vulnerable. The period from October to March was not long enough. One legacy issue after another had already seen trust eroded, and with it, patience dwindled. And at that we failed. It's a bitter reality to see that our strategy didn't have time to bear fruit. Until the beginning of this fateful week, I believed in a successful turnaround. However, rising interest rates, inflation, and market volatility shook sentiment, and following the issues around U.S. banks, there were fears of global contagion. Social media and digitalization fanned the flames of this fear. This hit us at our most vulnerable in mid-March. The massive outflows of client funds last October were a major setback. Working with the regulators, we withstood this trend thanks to the tremendous efforts of our employees. Yet, the downward spiral of events leading to this fateful week intensified later in that week, swallowing everything. The bank could not be saved. From then on, higher responsibilities came into play with the Swiss government, FINMA, and the Swiss National Bank, focusing on national and international financial stability, as well as the impact on the global economy. Until the end, we fought hard to find a solution, but ultimately there were only two options: deal or bankruptcy. The merger had to go through. The terms had to be accepted. The only alternative would have been a restructuring under Swiss banking law. This would have led to the worst scenario, namely a total loss for shareholders, unpredictable risks for clients, severe consequences for the economy and the global financial markets. It was our duty to protect the interests of our shareholders as best we could and to provide security to our clients. We did everything we could within what was possible. That's why the board of directors approved the transaction. This was one of the most difficult moments for me. Conclusion of the agreement with UBS was, and completion of the merger is, an essential cornerstone to ensure continuation of Credit Suisse as a going concern. This is a solution that restores clarity, security, and stability. Until the end, we were aware of the macroeconomic sensitivity at play. At the same time, we believed in the bank's resilience, its fitness for the future, its capital strength, and its potential. Yet the momentum of emotions and the erosion of trust proved stronger. We failed to stem the impact of legacy scandals and counter negative headlines with positive facts in order to rebuild the confidence lost. Credit Suisse has been a part of Switzerland for 167 years. For many former and current employees, for clients, for our fellow citizens, this bank forms part of our Swiss identity and the global financial market. The decline of Credit Suisse, the circumstances and various influencing factors can no longer be changed. Credit Suisse will unfortunately no longer exist in its current form in the future. What remains is, understandably, disappointment, bitterness, and among the long-standing employees in particular, also grief about the end of a bank that we continued to believe in. It is now our responsibility to look forward. I will work with UBS leaders Colm Kelleher and Sergio Ermotti for as long as it takes to ensure that the best possible solutions will be found for employees. I'm aware how difficult the situation is for many employees. We are committed to transparently managing this process and keeping this time of uncertainty as short as possible. Our focus is on continuing to serve our clients and on ensuring an orderly and careful transition. We are all committed to this merger and will devote all our energy to create a new and successful future with UBS together. Dear shareholders, we've taken responsibility. We've fought tirelessly to review all the options to find good solutions for the future of Credit Suisse, unfortunately without success. That's why we are now at this point that no one wanted to have. What I would like to do now is offer my thanks to you, dear shareholders, for the trust and support you have shown Credit Suisse over so many years. I would like to sincerely thank our employees. In particular, they have shown unwavering commitment to serving our clients day in, day out. With tireless dedication and great expertise, they have consistently demonstrated strong client focus, which has been praised time and again. I would also like to thank UBS. I know that they will tackle the upcoming integration and the challenges ahead with great discipline, fairness, and prudence. They're taking over a bank that has outstanding employees, a first-class client base with many long-standing relationships and important and often market-leading assets. Together with Credit Suisse, the new UBS will be able to significantly expand and strengthen its leading position as a global wealth manager anchored in Switzerland. This opens up new prospects for everyone involved. Thank you. And with that, let me hand over to our CEO, Ulrich Körner.
Thank you very much, Axel. Dear shareholders, clients, and employees, I would like to thank you for joining our annual general meeting here at the Hallenstadion in Zurich in such large numbers. This will be our last ordinary general meeting. I'm sure I don't need to tell you that I am deeply saddened by this, and it personally affects me a lot. When I was appointed Chief Executive Officer last year, I was fully aware of the enormous challenge that lay ahead for the bank, which has a proud history spanning 167 years. As you probably know, I had worked at Credit Suisse before and had a lot of fond memories of that time. When I returned to the bank in 2021, it was because I firmly believed that I could make a positive contribution, reduce legacy issues, tackle the problems that existed, and build a new Credit Suisse. In short, I wanted to create an organization that our shareholders, our clients, and all our employees could be proud of. Unfortunately, we didn't succeed in the end. We ran out of time. This fills me with sorrow. What has happened over the past few weeks will continue to affect me personally and many others for a long time to come. Many of you are long-standing shareholders of Credit Suisse. And I am aware that many of you are former or long-term Credit Suisse employees who spent a long time working for the bank. I would like to take this opportunity to express my profound gratitude for the loyalty you have shown Credit Suisse over the years. I understand that you feel disappointed, shocked, or angry, and I share the disappointment with you, our shareholders, but I also share the disappointment of all our employees, our clients, and ultimately the public at large. In February, we announced our financial results for 2022. Net revenues fell 34% year-on-year, reflecting declines across all our divisions. We reported a pre-tax loss of 3.3 billion Swiss francs and a net loss of 7.3 billion Swiss francs for the year, including significant write-downs of deferred tax assets. These results are totally unacceptable, but they clearly showed why it was necessary to launch a new strategy, which we announced at the end of October 2022. We had a plan to create a new Credit Suisse, a simpler, more focused bank built around clients' needs and based on the leading wealth management and Swiss bank divisions. The unprecedented radical restructuring of the investment bank with a clear plan was another key element of this strategy. Furthermore, we had a brand new executive board, which was working relentlessly on implementing this new strategy. We were executing at pace and were making good progress. We had already started to significantly de-risk the bank with the restructuring of the investment bank, and we were on track to achieve all of our 2023 targets. As Axel Lehmann mentioned, we were focusing all our efforts on changing course and addressing the problems of the past, to put Credit Suisse on a solid footing and to position it as a strong global Swiss bank. We worked hard to achieve this right until the very last minute. Unfortunately, it was not enough in the end. The bank had been significantly weakened by the strong outflows of assets in October 2022 as a result of unfounded rumors and speculation. At the same time, for legal reasons, our hands were tied for almost 4 weeks until the new strategy was communicated on the 27th of October 2022. Only then were we able to address these incorrect statements. I am extremely impressed by the way our employees rallied and made a huge effort to win back the trust of our clients. My colleagues on the executive board and myself, we also spend a lot of time in reaching out directly to clients to convince them to stay with the bank or to come back to us. The situation then stabilized somewhat at the beginning of 2023, in spite of a difficult geopolitical and macroeconomic environment. But despite all our efforts, we could no longer reverse the loss of trust. The sudden collapse of Silicon Valley Bank and Signature Bank in the United States caused shockwaves around the world and triggered a dramatic loss of confidence in the global financial industry. We were particularly hit by that and were particularly vulnerable at the time. While we were able to turn the situation around at the end of 2022, we were unable to repeat this achievement. This is a matter of deep personal regret to me. But the bank's survival was at stake, and we were forced to act quickly and resolutely. We no longer had a choice. The collapse of Credit Suisse would have been disastrous, not just for Switzerland, but for the global economy at large. Together with the Swiss government, the Federal Council, the Swiss National Bank and FINMA, the supervisory authority, we worked hard to find possible solutions within a limited time frame. In the end, the merger with UBS was the only feasible option. Indeed, the announcement immediately brought back stability, created trust, and paved the way for an orderly transition in the interests of our shareholders, our clients, our employees, and our business partners. Ladies and gentlemen, I share your disappointment. After 167 years, Credit Suisse is giving up its independence. A proud and at times turbulent company history is drawing to an end, and something new is being created. The integration of Credit Suisse into UBS brings together two market-leading wealth management franchises and two strong Swiss banks to create an even stronger global financial services company. As shareholders, all of you will be directly involved in the combined company's future, and I'm convinced that the entrepreneurial spirit shown by our employees, a significant part of Credit Suisse, will continue to live and make a positive contribution, albeit in a new form. During my short time as Chief Executive Officer of this bank, I never ceased to be impressed and inspired by the dedication, commitment, and passion shown by my colleagues. I would like to express my heartfelt thanks to all of our employees, every single one of them. They truly deserve our respect. As CEO, together with my colleagues on the executive board, and with the support of all our Credit Suisse employees, I will do everything in my power to ensure that the merger is completed to fully realize the great potential of the merged banks. We owe this to you, our shareholders, and we owe this to you as well as our clients, our employees, and to the Swiss public.
The circus is in town in New York.
New York City is always ready. Our message is clear and simple. Control yourselves. New York City is our home, not a playground for your misplaced anger.
It's a global spectacle. This is not just something that concerns the U.S.
The circus is going to persist not for weeks or months, but maybe for the next couple of years.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement and plead not guilty to charges in a hush money case. The last days of Credit Suisse. Shareholders whose stock has plummeted are likely to be unhappy at the Swiss bank's final annual meeting now. And Federal Reserve Governor Lisa Cook says disinflation in the U.S. is underway, but a tight labor market and China's reopening could keep pressure on prices. Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Matt Miller is in New York. Anna Edwards is off today. Matt, sure, equities are a little bit higher, but underneath the surface, according to Bank of America, we really hate stocks right now.
Yeah, absolutely. I mean, there is a lot of bearish sentiment. out there. We continue to get notes from people like Marko Kolanovic saying these rallies are kind of fake news and watch out for the real thing when we test the October lows in the next couple of months. Now, that could be a contrarian indicator, and maybe the markets are reading it that way. The S&P 500 futures are rising right now, and we did finish higher in the cash trade yesterday. So we're solidly over 4,100 on the benchmark index. We do see yields rising a little bit, and to be frank, yields have been all over the place. You know, yesterday we were looking at the 10-year at 354, 355, and then it dropped down to 341. These huge moves are pretty unbelievable, let alone the 40, 50, 60, 70-point moves that we see in the 2 years. So I'm not sure how much we can take from these yields right now. NYMEX crude is the first thing I checked when I woke up this morning, and I'm sure I'm not alone. Hasn't moved much from yesterday. So we got that big jump after OPEC came out with a surprise cut on Sunday. But it seems like the markets are comfortable with NYMEX, with WTI at $80 and Brent that little bit higher. For now, it looks like we're gonna stay that way. And then Bitcoin, speaking of stay that way, still at 28,000 and change right now, 28,117, so showing continued stability for the OG crypto. Just a quick look at what happened in Asia overnight. We did have the broader benchmark index, the MSCI Asia Pacific, down about 0.25%, but you have the Australian 10-year yield coming down right now at 326, and as Danny was telling me this morning, this is very important to watch the Reserve Bank of Australia because they were the first ones that led us into the hiking cycle, and now they're paused. So maybe they could be the first ones to come out as well. The Nikkei up 1/3% overnight in Japan, and the U.S. dollar a little bit stronger against the Japanese yen at 132.91. But the Bloomberg Dollar Index is coming down a little bit, so that could be a bit of a tailwind for risk assets. Danny, what do you see in Europe?
Matt, I'm ready to leave right now. I got you hyped up about the RBA. As far as I'm considered, my job here is done. Look, you said stability when it comes to the U.S. market. And that is what we're seeing in Europe. We're up across the board, not really decisively, so I don't know how much conviction are behind these trades, but DAX at more than 0.5%, CAC 1/3%, pretty flat on the UK benchmark, but that might be some FX effects I'll show you just in a moment. So it means overall for the Euro Stock 600, we're just floating higher with no catalyst to really move us one way or the other. The dollar weakness, though, that is playing through very apparently in sterling. I showed you FTSE 100 stocks that were unchanged this morning. Cable trades at 124.74, up 0.5% this morning. Again, it lends itself back to the dollar weakness. Lisa Cook talking about disinflation process starting. And at the same time, you have an ECB, Holtzman, one of the policy members, saying that they're still on track for a 0.5-point hike. He said that yesterday, and you continue to see yields drift higher in Germany. The 10-year yield up nearly 5 basis points. Finally, L'Oreal, not a big move here, but a big deal for them. They're spending $2.5 billion to buy Aesop. That's the skincare company. Their stores are just so aesthetically pleasing. So that's my takeaway from this deal. But more than that, Matt, you do have L'Oreal spending up buying later stage luxury companies. Before, it used to be all about early buys for them. But now they're spending a pretty penny to again, get some pretty stores under their belt.
All right, so we'll continue to follow the retail and consumer picture, but I want to get back to the politics right here in New York City. Former President Donald Trump is set to be arraigned today following his indictment, his historic indictment last week. Trump will surrender to law enforcement officers in Lower Manhattan to be booked. He's going to be fingerprinted. We'll get a mug shot in case you didn't know what he looked like. Here are the charges against him. That's probably the big deal, and then we'll get his plea, likely not guilty. Bloomberg's Kriti Gupta joins us now from outside the Manhattan DA's office. So, Kriti, how are we expecting things to play out today?
Well, Matt, it's going to be a historic moment for the entire country, but all the action is going to happen in the building right behind me. This is outside of the district attorney's office, where you are going to see President Trump escorted through a back entrance for really all the things you just said. Remember, the indictment that we got last week just establishes that a grand jury thinks there is enough evidence here to go to trial. This next step really is all about the charges, but the real takeaway is that, look, we're looking for anywhere from 24 to 30 charges, and we don't actually know what they're going to be. Overnight, the judge said that that, look, there will be no live broadcasting of the arraignment, potentially neither of the trial as well. Right now, only photographs are allowed before the hearing even starts. So we're not even going to potentially even get an answer of what the lead charges actually are until perhaps days or weeks after today's arraignment. The big takeaway, though, is what the response will be here in New York City. You're already seeing a massive police presence, a massive press presence, really protecting and preventing any sort of widespread rally or protest in either direction, to the point that you are starting to see streets from 57th Street down several blocks around Trump Tower, which is around Central Park for our global audience, all barricaded and off from the public.
There's already so much that's unprecedented about this, Kriti. The fact that he's a former president, and soon another unprecedented thing, he'll be a candidate facing charges. What does that mean for the 2024 campaign?
Well, one of the big questions here, Danny, is if he's charged with a criminal conviction, does that disqualify him from being president or even running for president? The simple answer is no. But there are some nuances here because, look, he is still dealing with several charges. The main one that's getting a lot of attention, that seemed to be the game changer for Alvin Bragg, the prosecutor here, was the hush money payments, about $130,000 to adult film star Stormy Daniels. But look, he's dealing with other legal trouble as well. Some of that includes classified documents, moving them from the White House to Mar-a-Lago. Other things include his role in the January 6th Capitol insurrection and what role he also played in potentially overturning or trying to overturn the Georgia election count in the 2020 election. So there's a lot going on here. The criminal conviction alone won't disqualify him, but in the Constitution, it says if there is any signs of treason, of insurrection, or of moving classified documents, that will for sure disqualify him from holding any public office.
All right, Kriti, thanks very much. Bloomberg's Kriti Gupta down there outside the DA's office. We hope you stay safe today. I imagine there will be many protesters and supporters gathered to welcome the former president. Now, let's get to banking. Credit Suisse's last annual general meeting is underway in Zurich. It's an opportunity for shareholders to speak directly to the board for the first time in 4 years. Credit Suisse Chairman Axel Lehmann spoke about the bank's problems.
The business model had to be fundamentally overhauled and changed. It was also clear to us that there were unhealthy developments, errant behaviors, and wrong incentive systems, that there were transactions that should not have been allowed to play out, that we needed to work in many areas, not only on structures, but also on mentality and culture.
For more on this, we're joined by Bloomberg's Oliver Crook. He is in Zurich. So, Oliver, what else have we heard from management at this meeting?
That's right, Matt. That is the chairman speaking right there. There are almost 2,000 shareholders in there. And as you say, this is the first time that they're able to see the board and discuss with the board all of the issues that they've had, yes, over the last 3 weeks, but over the last 4 years. And if you held shares since the last AGM, you got wiped out to the tune of 93%. So we've had the chairman out saying, really, the main message is sorry that our turnaround was not able to be successful. He really was saying that we did not have time to execute. And basically was saying that I think one of the big questions for shareholders, was there another option on the table? He's saying really not, that the bank could not be saved. It was a deal or bankruptcy, which would have been cataclysmic, not just for Switzerland, but for the global financial system. The CEO also speaking, saying again, we ran out of time, and that he's filled with sorrow, and that it affects him personally on many levels, and that the collapse would have been a total disaster. But imagine, these shareholders here, they have just lined up. We've just started. Now they're going through the votes, and now what comes next is the shareholders making their statements and asking their questions to the board.
What are we expecting from that? What could the shareholders, or what's top of their list and agenda of what to get out of Credit Suisse?
So you speak to people here, some people are here just to spectate, to see the end of this, what has been a 170-year saga for Credit Suisse almost, and really that came down in a matter of weeks. Some of them are just there to see that and to hear what has to happen. But then, I spoke to the Ethos Foundation CEO. He represents the proxy vote for the shareholders for Swiss pensions. That's about 3 to 5% of Credit Suisse and UBS. Here's what he said to me a little earlier.
Looking for past compensation and variable compensation paid to former board members. if there were to be some additional clawback to activate, because currently it's only the bonus 2020 and 2021 which are concerned, but there is more kind of deferred bonus which should be clawbacked, I guess, from former management.
So two sort of concrete things out of this, because obviously a lot of this is going to be symbolic. The concrete things, they're going to be voting on a number of board members, including the chairman. The Norges Bank has come out against the chairman. And this is really who is going to be the steward of this bank in the time that it goes to UBS, and basically being able to review all of the sort of issues and wrongdoings in the past. And for Ethos, for at least, that an investigation into the sort of mismanagement of the past could see some clawbacks and could actually hold some shareholder value in terms of getting paid out. So these are some of the questions that are going to be presented. I'm sure there will be a lot more. This will go all the way until maybe 6 p.m. tonight. So there's going to be it's a long day ahead.
All right, well, in that spirit, Oliver, go get yourself some coffee before the Q&A speaks. Oliver Crook there outside the AGM in Zurich. Australia's central bank, which is Matt Miller's favorite central bank, paused its almost year-long tightening cycle. Australian bond yields and the Aussie dipped after the RBA held its cash rate steady at 3.6% as it assesses the lagging impact of previous rate hikes. Eddie van der Walt, Bloomberg Markets Live editor, joins us now. Eddie, all joking aside, the RBA has this almost symbolic significance, maybe even not. I mean, they started this tightening cycle.
Yeah,
is this them ending it?
Look, I think they're everybody's favourite central bank, right? Because not only do they have they been early in the cycle, they come early in the day. So you've got lots of time to think about it and talk about it, right? But look, as you say, joking aside, I do think that what they are is symbolic. I don't think that it is necessarily going to mean that the rest of central banks are going to pause. But what they tell us is that, look, at the beginning of the year, central banks told us they were going to prioritize price stability over growth. What we are now learning is that central banks are prioritizing financial stability over inflation, right? And I think that is what the Central Bank of Australia is, Reserve Bank of Australia is symbolic of. I also think that what they're showing us is that, they're going to stand back a little bit and wait and see. Before we really see further tightening coming back to the
I think, Danny convinced me of the importance in terms of the cycle, but also obviously this is on the doorstep of the commodity boom and bust cycle.
Oh, yeah.
So they really are in some ways a litmus test for what the rest of the central banks around the world need to do in terms of inflation. In that vein, Fed Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market. Also, the war in Ukraine and, of course, the reopening in China that we're all watching. Listen to what she said yesterday.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is I think it's in process. It's in train. We're not there yet.
So everything but the commodities angle. Obviously, the OPEC plus surprise cuts may have an effect on inflation as well. Eddie, what's your view on the Fed's outlook?
Yeah, look, I think the Fed and other central banks would dearly love to hike rates further. They would like to show that they are taking the fight to inflation, bringing price stability back to the market, which is one of their primary goals. But at the same time, they do not want to tank the economy. So I think what we're going to see here is, look, they all had a shock. We saw a banking instability. As long as we don't see further banking instability, if we do not see another bank topple in the next month or so, then I think the hawks come back and they come back hard at us, and the market will reprice accordingly. But for the moment, I think there is just enough uncertainty for them to probably create a little bit of a window and say we take the foot off the brake pedal.
Hey, and you never know, maybe jobs on Friday will give them a little bit of breathing room too.
Absolutely. The jobs numbers on Friday, I think that's a wild card.
Eddie, thank you very much. As always, that's Eddie van der Walt of Bloomberg M Live. Coming up on the program, we're going to be speaking EM, emerging market strategist at NatWest, Eimear Daly, will speak to us. How does the Fed's tightening cycle impact the market she's looking at? And more on Trump's day in court with Thomas Gift, director at UCL Center on U.S. Politics. Plus, it is a busy morning in Brussels. A NATO foreign ministers meeting and the EU-US Energy Council meeting are underway. Our very own Maria Tadeo is there and will bring us the latest from both of those meetings later this hour. This is Bloomberg.
Joining NATO or not, then Finland decided NATO or not to join the alliance. Finland decided to and NATO becomes stronger and NATO.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York alongside Danny Berger in London. Anna Edwards is off this week. We are looking at bond market volatility, which has really been, well, almost off the charts. But certainly compared to equity market volatility as measured by the VIX, it's been exponentially higher. The MOVE index just shows us that there's nowhere to look for stability in this bond market. Joining us now is Ksenia Galushko, Bloomberg Equities team leader, to tell us what this means. I mean, why is the VIX showing such relative calm under 20 when the MOVE index is showing that bond yields are just all over the place?
Yeah, Matt, it's been a really interesting discrepancy. I mean, in general, in March, stocks have held up quite well, considering that we had those two massive financial distress factors, the Silicon Valley Bank's collapse and then the Credit Suisse's takeover by UBS. So despite that, equities have held up quite well, and VIX is really showcasing that. Yes, VIX did spike above 30 briefly, but then it very quickly returned to the level below 20, which to most market strategists indicates that the calm is there in equity markets, and investors are really betting that the Fed and the ECB might soften their stance going forward.
And it's a resilient equity market, especially as Matt and I started out the show talking. Sell-side sentiment is just so poor right now.
Absolutely, yes. And we've seen major outflows from equity funds as tracked by EPFR global data. I mean, people have mostly been rotating into cash. So money market funds have seen the biggest inflows in the first quarter since the start of the pandemic, when there was huge risk-off sentiment. So yes, investors have been coming out of equity funds. But at the same time, it's interesting because equities have actually stabilized and have been gaining. So there's this discrepancy between equity flows and also what the market is actually doing. But according to Bank of America's bull bear indicator, this is actually bullish for stocks, because when the sentiment is so negative, it is a contrarian indicator that stocks have room to rise from here.
Right. Historically, that's the perfect time to be buying. Ksenia, thank you so much for joining. That's Bloomberg's Ksenia Galushko. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now keeping you up to date with the first word news. Let's get to it. Russia has taken over the rotating presidency of the United Nations Security Council. Its ambassador made it clear that it will use the opportunity to promote its defense of the war it has waged in Ukraine. The U.S. ambassador to the UN, Linda Thomas-Greenfield, called the matter an April Fool's joke and said Russia will use the chance to spread more disinformation. In California, relentless winter storms have left behind one of the state's biggest snowpacks on record. Officials say its water content measures 237% of normal. That's good news for California, which has been suffering through a drought. But there's also concern that warmer weather could lead to flooding and mudslides in the state's Central Valley. In sports, the University of Connecticut has won its 5th NCAA men's basketball title. The Huskies beat San Diego State 76-59 in Monday night's final in Houston. UConn's Adama Sanogo finished with 17 points and 10 rebounds and was named the tournament's most outstanding player. And Bloomberg has learned that Warner Brothers Discovery is close to a deal for a streaming TV series based on the best-selling Harry Potter books and movies. Each season of the series would be based on one of J.K. Rowling's bestsellers. Warner Brothers previously turned each of the books into a hit movie, of course. And we have a producer Danny. Caitlin Hulman, I'm not sure if you know her. She plays on a professional Quidditch league. So this has become serious business.
That is incredible because you know why? It's us that grew up as Harry Potter nerds. We're now adults and organizing things like that. I will certainly be watching that program. All right, coming up on the show, Eimear Daly, emerging market strategist at NatWest, will speak to Matt and me. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement and plead not guilty to charges in a hush money case. It's the last days of Credit Suisse, as shareholders whose stock has plummeted are likely to be unhappy at the Swiss bank's final annual meeting today. And Federal Reserve Governor Lisa Cook says disinflation is underway in the U.S., but a tight labor market and China's reopening could keep pressure on prices. I'm Danny Berger in London with Matt Miller in New York. Anna Edwards is off today. Matt, yes, stocks are higher. I got to say, it doesn't feel a lot of conviction, but maybe we're taking hope from an RBA which has decided to pause. Maybe it means the Fed is next.
Yeah, absolutely. Maybe that's the beginning of a pause cycle or even a pivot cycle around the world as the RBA led the hiking cycle or led us into the global hiking cycle. On the other hand, stocks are already relatively high and relatively richly valued, right? We're trading at more than 18 times earnings, and the S&P 500 is well over 4,100. In the cash trade we saw it close, I think, around 41.37 yesterday. Right now we see S&P futures up a little bit nonetheless, and investors willing to let go of the perceived safety of government debt. The 10-year yield floating up a little bit. Remember yesterday at this time it was at 353, 354, and then it plummeted to about 341. Now we're climbing to 345. As we pointed out, the volatility in rates has been off the hook. So you're going to see any given number depending on what time you look. NYMEX crude, after the jump from the OPEC Plus surprise production cut, it went to 80 on WTI, and it's held there. Obviously, Brent crude is a little bit higher, but right now we're trading at $80.93 a barrel, and Bitcoin has been a picture of stability as usual. $28,105 is the level for the OG cryptocurrency. Let's get into some of the pre-market movers this morning. In terms of single stock stories, Etsy is one of those that's moving in the pre-market up 3.5%. Piper Sandler upgrading Etsy to an overweight, saying that while macro remains choppy, the online marketplace operators' operating profit margin and long-term growth opportunities put it among the highest quality names in coverage. That's a pretty serious statement. They say core marketplace strengths of sustainability, intention, and personalization fit well with core values of Gen Z and millennials. And I did some channel checks this morning, and that tracks. Stellantis is a mover up almost 1%. This global automaker has reshaped its European financing and leasing services to simplify relations with bank partners and to tap growth potential. We've seen other automakers do the same. Ford yesterday put out a press release saying it's making moves with its credit arm to go direct to consumer. In general, automakers are seeing stronger U.S. new car sales because dealer inventories are replenished. David Welch and Keith Naughton, two of our brilliant reporters out of Motown, have a great story on this that I recommend checking out on the terminal. They point out that those gains are being muted by incredibly high sticker prices, as someone who shops for cars all the time can tell you, and surging financing costs that may put monthly payments out of reach for the average Joe. Finally, Warner Brothers Discovery is close to a deal for a new streaming TV series based on Harry Potter. We had told you about this. They are obviously best-selling books, a string of Hollywood movies, and now you'll be able to stream each season of the series, according to these people, will be based on one of J.K. Rowling's 7 books. So that means a long time to milk it and make money in terms of WBD, Warner Brothers Discovery's HBO. I want to point out that Virgin Orbit Holdings, we knew something was amiss here as they were cutting 85% of their staff, but now they're filing bankruptcy, Chapter 11 in Delaware. As a result, what was already a penny stock falling another 26% in the pre-market, and you expect it to plummet in the cash trade as well. Danny?
Virgin Orbit going bankrupt is kind of the full circle of the SPAC boom. And yes, that is an orbiting joke. Okay, so European stocks, those are up 0.5% this morning. Look, it was a really mixed day yesterday. It was really because of the oil story that drove things. But we don't have that big catalyst today to really put us in one direction or the other. So we are more or less just kind of melting higher, waiting for something to happen. Sterling, though, that is decisively higher. We're at 125.01. On it, up 0.7% versus the dollar. It is a day of a broadly weaker dollar, and that's translating into FTSE stocks being down this morning, that currency effect. There's also an ECB where you continue to have hawkish members who are saying hawkish things. Yesterday, it was Robert Holtzman who said a 50 basis point hike is still on the cards for the ECB. So you continue to get a sell-off in German bonds. 10-year yields are higher by about 4 basis points. Finally, just want to point out a big M&A coming to Europe. It has been a really slow year, given just how difficult it is to get financing from banks, from leveraged deals. Certainly, the Credit Suisse stuff doesn't help. But L'Oreal will be buying Aesop, the skin brand. They make soaps, they make shampoo, that sort of thing. From a Brazilian company, Natura. They're going to be buying it for $2.5 billion. So it's a large deal. And Matt, what this really does is just add to L'Oreal's luxury portfolio.
Yeah. Well, I know I have it in my luxury kit. We'll continue to watch those shares. For sure. L'Oreal up there about 0.5% in the cash trade in Europe. Let's get now to emerging markets. A turbulent end of the easy money era has deflated expectations for a boom year for battered EM assets. Joining us now is Eimear Daly, emerging market strategist at NatWest. And I want to first ask you, Eimear, if you take at least a little bit of comfort from the RBA's pause. As Danny pointed out, they led us into the hiking cycle. Can they lead us out?
Yeah, I definitely think it is a positive. You know, we've obviously seen kind of concerns about financial stability really rock EM assets and kind of undermine some of the confidence an investor had at the start of the year for like a risk rally. But I think the fact that we are seeing G10 central banks pivot dovishly, you know, this inflicted so much pain on emerging markets all through 2022, just via currency depreciation and kind of sucking capital, global capital out of their local bond markets and equity markets, that actually that pivot, you know, a dovish pivot from G10 is so crucial to their outlook. And I would argue it's actually positive for EMFX.
It comes after a kind of a depressing sign from OPEC Plus, right? The surprise cut that they made on Sunday sends a signal that the demand just is not showing up from a reopening of China. We expected that to drive global growth. What's your take on what we've seen?
Yeah, I would, you know, absolutely say that's true. And I would caveat my kind of positive EM outlook by saying it's high quality carry that we expect to perform. This isn't kind of the supermarket sweep that we had at the start of the year. This isn't a case of investors kind of loading up on all EM assets. This is very much kind of nuanced. Definitely OPEC Plus acted yesterday in kind of a defensive price mode. You know, they did, you know, cut back oil production, because we have had, you know, a negative hit to growth from banking sector concerns. So I think it's very much in line what we've seen over the last few weeks. They're acting preemptively, and we know that global growth, you know, is slower. People have downgraded their expectations, but I still think there is selective opportunities there for high carry, high quality EM assets.
I was going to say, because usually the risk of a recession in developed economies, usually China maybe not growing as much, is bad for EM. So on a whole, is that still true, except for the high quality names?
So yes, we are not overly constructive, I would say, about Asia FX. We're more looking towards high carry, where you get paid for taking those risks. So we like Mexican peso, we like Brazilian real, we like HUF on a very short-term basis, and we like Czech Republic, where, remember, these central banks are still being very conservative. They haven't pivoted dovish, even though in a lot of cases, inflation is actually coming lower. You know, they are really concerned about the risk of capital outflow, and they had a stark reminder of that over the last few weeks. We've seen them really push back, delay when they could actually start easing, and that means that investors could earn significant returns by just holding their currency.
I was going to say, I did write down a list of EM decisions last week, which were hawkish. South Africa, Philippines, Egypt, Colombia, Mexico. The thing that stands out to me is these are geographically very far apart countries. They're diverse. They have different drivers, but yet they aren't pausing. And as you say, they probably could. So how does that change the economies of these countries going forward? Do they risk tightening things too much?
I think the reality is, you know, they're geographically spread, but they're all emerging markets, and investors look at them in the same way. And if you had continued to get Fed tightening or G10 central bank tightening, you would have had global capital just being pulled out of those and depreciation pressure. So yes, it is tough on those economies that, you know, they have to keep rates very high in order to kind of appease financial markets, to kind of offer investors return for the risks embedded. And I would say, you know, there's a lot of cases, for example, Mexico, where, you know, you do have spare capacity opening up in the economy. Arguably, they could cut, but they're very much kind of focused on appeasing foreign investors and bringing inflation right back down to target.
Do you see the dollar weakness that we're watching continuing, Eimear? Because, you know, last year we were up at 1353 on the Bloomberg Dollar Index. Today we're down at like 1226. So even as bearish sentiment rises, no one's running to it for safe haven.
Yeah, I do think the big risk is that other side of the dollar smile, that, you know, you do get another kind of capitulation in risk, and everyone runs for the dollar. But right now, I think, you know, the big driver over the last 2 years has been monetary policy divergence, and the U.S. led that G10 rate hiking cycle. And obviously the dollar led gains. You know, we have seen risk recover. I know some of it, you know, I know you mentioned the bond space, that vol has been slow to come down, but in equities, we are seeing risk recover. In the VIX, we're seeing it recover. So we are seeing, you know, signs of more stability coming back into markets. And it does look like, you know, time and again, kind of fiscal regulators have stood behind the banking sector, have stood behind financial markets.
Stability would be so nice, considering the lack of sleep we all have not had over the past month.
Yeah.
Eimear, thanks so much for joining us this morning. That's Eimear Daly of NatWest Markets. Now, coming up, Donald Trump is set to appear in court today. We're going to have the latest with Thomas Gift, director at UCL Center on U.S. Politics. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with the CEO of Maserati, Davide Grasso. That's at 10:30 New York time. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now, the New York City Police Department, U.S. Secret Service, and other authorities are on high alert as former President Donald Trump is set to be arraigned this afternoon in Lower Manhattan. Remember, he forecast death and destruction if he were indicted. That has happened. And Trump's lawyers say he will plead not guilty of hush money payments made to a porn star during the 2016 campaign. Joining us now to talk about this is Thomas Gift, director at UCL Center on U.S. Politics out of Harrisburg, Pennsylvania. And Thomas, let me first ask about, you know, the allegations that we know about, right? We're still waiting for the charges, but is there any doubt really that the president made these hush money payments through his lawyer?
There's absolutely no doubt about that. And in fact, Donald Trump has acknowledged as much. So really, this is just about whether that act actually constituted a crime. You know, Matt, there has just been so much speculation about the charges so far on both the left and the right. And really, that's all it is, speculation. We have an idea of what the counts will include, but we don't know precisely what they'll be. And more importantly, we don't know what the exact evidence Attorney General Alvin Bragg may or may not have in his back pocket. Obviously, this is a political moment, and partisans are going to do what they do. For Trump, it's a witch hunt, a partisan vendetta, a George Soros-funded hit job. For never-Trumpers, this is all sort of poetic justice. But I do think that it's a little bit unfortunate to this point that there hasn't been more restraint in approaching the case, precisely because we don't know what these charges are or the underlying evidence.
Yeah, even from the point of view of Democrats on the left, there is concern about why Alvin Bragg has brought this case. There have been accusations that he's doing it to get ready for his re-election campaign. I mean, what kind of charges do we need to see that would actually make sense for, you know, giving the former president this much publicity?
No, absolutely. It's a great question, Matt. And certainly Republicans are asking it, but a lot of Democrats are as well. And that's especially the case because there are all these other cases that Donald Trump is currently embroiled in. You know, for example, the election rigging case in Georgia, the case over the mishandling of classified documents, the investigation into January 6th and its aftermath. I think a lot of Democrats think that the evidence is stronger in those cases than in the current one. Again, with the caveat that we don't know exactly all of the charges that Alvin Bragg is bringing. But you would think that there would need to be a fairly high threshold here to make it all worth it, and for it not just to backfire on Democrats. And that's really been the entire risk to this point. You know, Donald Trump has, I think, quite successfully in the court of public opinion been able to use his standard lines of witch hunt, political vendetta, political hit job, et cetera, to frame this essentially as saying, you know, if it were anyone but Donald Trump at the center of this controversy, no prosecution would ever be filed.
In terms of that high bar, because one of the things we're waiting to see is what changes this from a misdemeanor to a felony. How high is that bar? What sort of things does a prosecution need to prove in order to charge Trump to that level?
Yeah, no, it's a really great question. And I think at this point, Trump's defense is essentially that, yes, I made these hush money payments, but there's nothing illegal about having an individual sign a non-disclosure agreement in exchange for silence. And essentially, the defense is going to say, well, these hush money payments really had nothing to do with the campaign and everything to do with just avoiding personal embarrassment. Trump seems to have no shame, so that strains credulity on its face. But I think it's going to be hard to disprove that if you are the prosecutor. But there's been a lot of back and forth till this point about whether this should be charged as a misdemeanor or whether it should be charged as a felony. I'm not a lawyer. I can't speak to all of the particulars. But, you know, there has been some indication that this would rise to the level of a felony if the payments were in furtherance of this larger crime surrounding campaign finance, and that it's not just a simple case of cooking the books or misrepresenting business documents.
Thomas, quickly here, what do you make of the fact that most Republicans, even those who are assumed to run against Trump for the presidency, like DeSantis, have more or less backed him, have rallied around him, have called out Alvin Bragg?
Well, you know, the phrases hush money, adult film star, criminal indictment, combined, it doesn't seem like they translate into a successful run at the White House for Donald Trump, especially for a twice impeached candidate who lost the 2020 election. But this is Trump. I mean, what else can you say? He's dictating the terms of the conversation. And Trump's opponents, as you suggest, really aren't punching back. And I think that's because they don't want to alienate the MAGA base. We saw Ron DeSantis explicitly say that he wouldn't participate in any extradition pursuit of Donald Trump. I mean, no one really asked him anyway. But it's really, really interesting because we really have seen this reluctance among other Republicans not to go head on against Donald Trump. And I think that's probably an indication of what we're going to see leading into at the heart of the 2024 election, that, a trend that has been emergent over the last several years is that Republicans just don't want to criticize Donald Trump directly because they don't want to alienate the base. And I think essentially that's reflective here.
Okay, Thomas, thanks so much for joining us this morning. Certainly gearing up for a historic day. Thomas Gift of UCL Center on U.S. Politics. Coming up, big meetings underway in Brussels on energy security and Ukraine. We're live next with the latest from the NATO and EU-U.S. Energy Council. This is Bloomberg.
Now let's take a look at what's ahead today. Credit Suisse is holding its last annual general meeting in Zurich. That's ongoing at the moment. Our Oliver Crook is live in Switzerland to report on that. Plus, more Fed speak coming out with Susan Collins, Lisa Cook again, and Loretta Mester set to speak. We'll bring you all the headlines from those speeches, as well as any Q&As that may follow. Trump's arraignment is expected at 2:15 New York time, so we'll finally get the charges against the former president, this historic indictment. And in Brussels, NATO foreign ministers are beginning a two-day meeting. The EU-U.S. Energy Council has also been meeting with U.S. Secretary of State Antony Blinken in attendance.
And Bloomberg's Maria Tadeo is also there covering both those meetings and joins us now in Brussels with the latest. So U.S. Secretary of State Antony Blinken and the EU's foreign policy chief are meeting today, as Matt was just saying. Maria, what have we learned?
Well, Danny, two things. One, they reiterated and repeated their support for Ukraine. But obviously, this is coming in the week where you see OPEC make big moves. And this has serious ramifications for the oil cap for the European Union and the G7. Because remember, if oil prices go up, you get to a point where that $60 a barrel cap could be compromised. The other issue, of course, and maybe you've noticed because the background gives it away, we've now relocated to NATO, where in a few hours, Finland is now expected to join officially the alliance. This is a historic shift from a country that was neutral. And let's make it very clear, Finland would not be joining today NATO had Russia not invaded Ukraine. So this is one of those real ramifications, geopolitical repercussions of the war that is, unfortunately, as you know, still ongoing.
Okay, Maria, thank you very much. Bloomberg's Maria Tadeo in Brussels. And yeah, Matt, look, it's interesting. Maria's got a lot to cover there. We have Finland also just on the heels of an election joining NATO. We really have seen that change after Russia's invasion of Ukraine. It really has changed the European landscape when it comes to alliances.
100%. Plus, you've got these surprise oil cuts, production cuts that came out on Sunday, and that could change the calculus as well.
Yeah, it's, again, OPEC Plus wanting to be the central bank that moves things. It's not just the Fed, it's OPEC and Saudi, too. Well, more early. That's it for Early Edition. Surveillance is up ahead.